Amit Khurana is here to talk more about the fundamentals of the market. Amit, I remember we were talking about Vaishali Parekh will also talk to us apart from Kunal on charts. All three of you, thank you very much for your time this afternoon. Amit, you have been cautious slash slightly on the sides for weeks in this market, but last 2 weeks, the kind of dip opportunity was provided. Did you utilize it? Tell your clients about buying, or still observing? You expect lower levels in coming weeks?
Yeah, thanks, Ajay. I think So there are two ways to look at it. One, you look at the mid cap and the small cap indices and the components. One third of them have corrected by a reasonable double digits in the last few weeks, which is what we had called out last month, and seems to have played out as per expected lines. But there's still a fair amount of market, breadth, which has not yet corrected to the degree and to the levels which would make us feel, to go all in. The second version one can look at is, do you start nibbling into the names which have corrected or which are your preferred picks? Yes, we do find some of the pockets which are now emerging and are worth looking at it, but those are very few and far between. So to encapsulate, I think this market is moving into a zone which is showing signs of correction. Some have played out and some are yet to play out. But keep your radars on, and at the requisite levels, one would look to allocate money, which is our preferred mode of portfolio allocation, which is bottoms up, and that's what we're playing out for.
Amit, hi, afternoon. Seems like you're all set for holy celebrations already. Where's the color in the market? What is it that you're looking to buy in this recent decline that we've seen in specifically small and mid caps?
So we're looking to essentially back up the same names that were there on our list starting last year's rally, but some of them had become very, very rich in valuation. So it was more of a cool off. So we still like real estate as a theme, which we are backing up. We continue to like Alcobev as a category that we are backing up, and some of the names, while they may have muted earnings for Q4, but we believe structurally India remains a very strong volume growth market and premiumization market on Alcobev, so that we continue to back up. We also believe that there's some of the pockets which have not performed as per expected lines will hopefully form cyclical bottoms, and give us some opportunity, which is more related to domestic consumption names. We continue to like some of the mid-sized banks and affordable housing, and we continue to like mid-cap cement, but at a certain price point as the corrections finally end on that space.
Right. Obviously, talking about that consumption theme and aviation theme, that's what we're keeping focus on, because Indigo is actually having their meeting today, and we do have some other highlights that have come in from this analyst meet, which is underway today. So Amit is joining in with us to give us more details on that. So Amit?
Well, the fresh set of commentaries that are coming in from the Indigo's second physical annual analyst meet is, firstly, they are saying that the Q4 yields are expected to be better on a YY basis. Now, earlier expectation or guidance given by the company was that in the fourth quarter, yields are expected to be flat on a YY basis. But right now, the company is saying that they would be better on a YY basis. So with higher air traffic, Q4 profitability could be on the better side for Indigo. Apart from that, the new pilot norms that are expected to be implemented from the June 1st are expected to lead to higher cost for Indigo. So Indigo did concur to that view of the analysts, and they also said that they are in talks with the government for delaying this implementation of new norms, because there's a shortage of pilots in the system, and if these new norms are implemented from June of 1st, then that could lead to higher costs for the company, more cancellations, and eventually it could lead to higher fares going forward. That is what the management has said. Now, Indigo has always been in amidst of news which is related to grounding because of the engine issues of Airbus, and they are saying that the grounding of situation, aircraft grounding situation would improve over the next 18 months as per them. And they also said that they would not slow down on deliveries even once the grounded aircrafts are on track. Apart from that, they also said that they are in discussion to take in more aircraft on damp lease. They are planning to take around 11 to 12 more aircraft on damp lease. Currently, they have only 2 such aircrafts on damp lease. And on profitability front, when one of the analysts asked them of how they are looking to grow or see their profitability grow over the coming years, given the fact that they are expanding so rapidly. On that, the management said that bigger network and bigger airline would mean higher profit for Indigo going forward. So that's one of the key commentaries coming in from Indigo's annual analyst meet.
All right. Let's take a check on Interglobe Aviation with Kunal. And Kunal, you're looking at a slightly softish trade for Indigo today, but it has done phenomenally well in the last 6-8 months, and now they're talking about aggressive numbers. What are the charts? Are the charts factoring in this strength?
Yeah, so I think it's done exceptionally well. You rightly said it, from 1800 levels to 3000, 3200 for the stock in the last, I think, 1 year. I think, Feb or March 2023 is where the stock was almost at those 1800 levels. I think it's done consistently quite well. Even in the last, 1 week, 1 month or so, the stock had actually been making fresh highs for itself. So, the correction was a bit less as compared to many of the other names on the formidable stocks, but I think the stock made a fresh high about the 3000, 3200 mark. So I think it's a very strong stock, indicative that the trend should sustain as well as continue to grow.
Okay, that's on Indigo. But, Vaishali, good afternoon and thank you so much for joining in with us. I want to know, in the auto sector, anything specific that you're seeing on the charts there where you're finding value in any of these names, whether Maruti, Hero, or, what are you looking at over there?
Very good afternoon, all of you. Yes, so auto sector has been doing very well, but we have still been recommending Maruti because, we've seen a good run up in Tata Motors. We have seen in two-wheelers also. Now TVS is showing a little bit of a corrective move, but I think Maruti still has scope for a further upside towards 13,000 levels. And this is what we have been recommending even in the recent past as a trading strategy. So right from 11,300, we have been recommending this stock, and we continue to stay bullish. And yes, so this is one stock. And I think Tata Motors also, after the retracement that we saw in the last few days that a corrective move had set in, I think Tata Motors is still very well poised with a support of 940. So I would say better it would be to buy in decline, because we would now look at target once again at 1030, 1050.
Okay, on that note, let's just slip into a very short break. Nifty at 21,130 levels, around those levels, keeping an eye out on that. 22,000, I beg your pardon, 130 levels. But we'll slip into a break and we'll be back with more.
If you like this video, then like, share and subscribe to ET Now.